It does sometimes happen, but you know, it's going to be sometimes. It's not always going to be every time. But it was quite obviously the oil trade from the report. Would you agree with that? JT saying yes. JT says yes. Yeah. Would you agree? Easiest $1,000 you've ever made? Because it was just too easy, wasn't it? When you look at yesterday's results, and we were too busy trading this to even bother mentioning it, but you know, I don't think it's terribly difficult for anybody to read. And you can see that yesterday's results, quite obviously, you know, looking at the shape of the oil release, Wednesday, 25th, and you look at it and you say draw, 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 but it's not just draws, is it? It's lightning bolt draws. Well, this is what we call a boo-boo, right? This is a massive boo-boo. It's not a small boo-boo, is it? This is what we call a massive boo-boo. Because everything beats, I mean, you might say, but this one didn't beat the expectation, as in, sorry, the prior. But you're not going to beat 11.5, are you, JT? That's not going to happen. But it still came in at minus 5.8. It still came in at minus 4.0. Came in at 2.1. And interestingly enough, you still had opportunities after the data came out to buy 65. Look, this is 10 minutes after. This is 15 minutes after. This is 20 minutes after the data came out. So you had 20 minutes. Now, a lot of people say, yeah, it's a bit too fast for me. What, 20 minutes? Really? You think you're going to be able to trade and you can't trade within 20 minutes? I think you're going to struggle as a trader if that's the case, right? We'd already seen the swaps going bid out of the numbers anyway, so that would have been a question mark about why it hadn't gone up, as if the swaps hadn't started to move. And you can see that from that 65 within, you know, the rest of the afternoon session, the trade then traded at 66s, and you made $1,000. It's the easiest $1,000 any oil trader probably has ever made in their entire lives, bar none. Just too easy, isn't it? Agree with that? Too easy. So I'm assuming because we prepped everybody ready for the oil anyway coming out, so I'm assuming everybody played it. I mean, I was too busy to bother mentioning it, but I don't think I need to mention it, do I? I think everybody looks at it and goes, this is just too good. It's just ridiculous. Absolutely ridiculous that these types of trades exist. Now, you might say, well, why does it exist? If it's so obvious, why was there an opportunity to play this? Why was there an opportunity to play this? Well, it's an opportunity to play it because, you know, people are maybe on the wrong side. There's maybe distributions to take place. There's maybe, you know, the idea that there's other things driving that people are hedging out this position against. They obviously had the situation yesterday against the dollar, but even the dollar was telling us to buy it. The dollar weakness was creeping into commodity prices. We'd already seen a very, very strong toxic, the biggest toxic candle we've seen in the entire day coming in at 3 o'clock here. So we'd already seen that toxic candle coming in here. Somebody's got wind of that report, right? The guys that have been buying into this low edge here have got wind of that report. That's very cheap oil, so they might as well take a shot at it. And then all of a sudden you just pay $1,000 into your account by 5:30 London time. 5:30 London time. You've paid $1,000 into your account within a 1.5 hour time frame, which is just unbelievable that it's that easy. But it was that easy. That's the point. And they don't often come along like this. And sure, I mean, you always look at it and you say, I'm not sure. It shouldn't be this easy. It shouldn't have this quality about it. But remember, an awful lot of trading is in the spread. A lot of trading is in other spreads. There's a lot of hedging and things going on. There's a lot of things taking place here. So you've got to remember that there are other things that can cause price to be jammed up in these areas. But this is the biggest internal report you'll get as an oil report for oil. It is not an exo report. It's an endo report. This is going to be a direct response. Now, you might say, but what about those occasions where it's really bullish and it doesn't go up? Yeah, well, we normally see that from the swap dealers or the dollar, for example. Something's working hard against the storyline, and we can see it's not going to go up at that point. looking at the crack spread, it's one of those types of situations again that you can even see the crack spread actually initially responded with a solid upside pop. This is obviously inverted, so a solid upside pop suggesting, wait a second, the crack spread's getting an upside pop, but then people forget that the crack spread having an upside pop, well, what does that mean? What does an upside pop mean? This actually, for the data release, is actually a negative correlation. You might remember I've mentioned it. Remember, this is crack spread inverted, not crack spread. And what I've said is that going into an oil release in the past is that the crack spread becomes positively correlated for a short period. Why? Because everybody's focused on the gasoline numbers. So obviously, as the crack spread becomes positively correlated, people actually focus on gasoline and not specifically the oil input numbers. So when I see this falling, that's really exciting because that actually is what I want to see if I'm bullish, interestingly enough. So I want to see on the data release, I want to see this actually dropping out a little bit here to be a buyer into this. Now, if you think about it, if this is oil 3 minus RBOB and gasoline, RBOB and heating oil, right? Then what's actually happening on this as a process? Well, they're selling oil and they're buying RBOB and gasoline, aren't they? Well, when you look at the distillates and you look at the gasoline draws, and they're way, way above forecast, as in massive draws against forecast, right? And they're way above prior, as in massive draws against prior. If you were looking at that, what market would you want to buy most of? Gasoline or oil? Well, it's quite obvious. You're going to buy gasoline, aren't you? You're going to buy RBOB. You're going to get involved in these gasoline and distillates products, right? So if you get involved in the distillates products, what are you going to sell? You're going to sell oil and you're going to buy the distillates, correct? What does that green line show? What does the green line show happening here? Somebody selling oil and buying distillates to replace them, right? Somebody selling oil and buying distillates to replace them. And therefore, when you see that sale coming in oil here, it's going to drive the oil price down to allow you to buy oil into the booby report, It's just too sweet. We have covered this many times in the classroom, so everybody that trades oil should know this at this point, because we have went through this data release point where the actual results are inverse to what they normally are, which is a negative in this case, it's a negative correlation, a positive correlation line. So we switch the narrative over. Remember, the crack spread is gasoline minus oil, not the other way around. This line is oil minus gasoline. So this is inverted crack spread, so that it's a positive correlation to short-term oil prices. But the only time that it becomes negatively correlated, i.e. that in the short term crack spread becomes positively correlated, is the data release. We have covered this many times. So in the data release, when that rips to the downside, I'm bullish oil. Bullish oil. And if I'm bullish oil, you get this beautiful rip off this price here, and we make a lot of money for $1,000 here, guys. That's pretty good, isn't it? You can't believe how good that and how easy that was. So you should have made your day's money on this. There was plenty of opportunities. You had 20 minutes to buy into the bottom edge. And, obviously we were really busy doing exactly that, which is why we didn't go through the actual report, because it was just too busy making money. We can't do classrooms if we're making the cash. Anyway, welcome in, guys. I hope you're all good. Let's get through. Today's numbers. The numbers are coming out obviously in half an hour. We've got a few interesting points of interest today. So let's get through what we do have. This is now Thursday, the 26th of June. And looking at what we've got, obviously some big hitting numbers today, as you can probably imagine. Well, let's get back into the overnight session. Not an awful lot you can see here to pay any attention to. Looking into London, you can see that, first of all, the Europeans' consumer sentiment's coming in really poor at 20.3. Trade numbers coming out of the Confederation of British Industry coming in at -46, a big miss as well on that one, so that's bad news. Moving past that, we can obviously see that going into the US session, we've got plenty of speakers coming out here, Bark and Bailey, on the wires. We've got, when moving into the US session, we've obviously got these core PCE price index numbers, durable goods numbers, and the GDP, the deflator prints, the GDP final prints. So remember, this is not the big one. This is the small report, but it's still important for your inflation bond trades. So just bear that in mind as you're coming into this at past, that this will be an impactor for your bond prices. And by default, therefore, it's going to be an impactor for your US dollar prices as well. So just be careful here. Durable goods, not as important as it once was, but it's still an important release. It still shows a health of an economy. GDP numbers is, I don't think the GDP has a massive impact unless it has a massive change to what everybody thought it was going to be, because it's obviously massively lagging the marketplace, right? So this is a really big lagging information point here, the GDP number. So it's not, I don't think it's the most important, but anyway, it is still going to be paid attention to, isn't it? Moving in past this, we've obviously got pending sales changes here. We've got the natural gas storage numbers coming out at 3:30 at the usual time slot. We've got apparently KFC coming out, Kentucky Fried Chicken coming out at 6 o'clock, telling us about composites and manufacturing. We've got the 4-year bill auction coming out at 16, sorry, and the 7-year notes coming out at its usual time slot at 6 o'clock. Remember, bills, 4:30, 7 o'clock. Notes and bonds, 6 o'clock. So you're always going to be aware 4:30 is a bond trade thing. We need to be aware that if we're in bonds, we can't forget, in case there's a bills auction coming in at 4:30, we can obviously be wary of the fact that we don't want to be maybe overly positioned or whatever, but we just need to be awake to the fact that 4:30 we do have sometime a very short-term bond auction of some description. It's the bills market, so it's a very short-term treasuries, and that's at the 4:30. And if there's a second issue for a different issuance period, then of course that's going to then be at 7 o'clock. And you can see that there is no 7 o'clock trade today, but you can see there is a 6 o'clock trade because the notes come out at 6 o'clock here. And that's obviously starting to stretch the duration. We had the 5s the other day, we've got the 7s today, and then it goes through the various expiry dates as the month progresses, as you know. So that's where we're at today. So not a huge amount, but these numbers at 1:30 still going to be potentially market impactful. So just bear that in mind. The current chatter, of course, is all about the nomination of the next Fed. Who's going to take the job? Somebody suggested that perhaps Trump's going to nominate himself for the head of the Federal Reserve. So that would be actually quite witty, if you ask me. So who's going to be the next head of the Fed? Suggestions, of course, that he's obviously finished with Powell. And Powell's on the way out, of course, and as you know, it is an appointment by the president, as it always has been. And remember, Powell was Trump's appointee last time round, wasn't he? And but it's the same old situation. Trump wanting interest rates down, wants the people cheaper mortgages, cheaper borrowing for the US, and of course, the Fed saying, well, we've got a mandate here to not allow that to happen if we're still worried about inflationary measures, of course. And, changing that person round, I mean, you can change the top of the table round, but it doesn't change necessarily all the other members, does it? And they still have to ultimately back up any major plan, but it's very obvious that you don't want to have constant fighting inside of the Fed itself. I mean, it's not necessarily an unhealthy thing, but it hardly shows a uniform approach to monetary policy, does it? So that's the problem, I suppose, that you sometimes have with Trump, is that the idea of independence is some people will argue that Trump's probably right. Maybe the central bank shouldn't be independent because otherwise you get fiscal and monetary going sometimes in completely opposite directions, as has happened on occasions. Certainly in the UK, when trust came into play, there was a fiscal monetary separation, if you like, complete separation, and you ended up with one going in one completely different direction to the other, and that's obviously kind of damaging for the economy, isn't it? That can be very damaging. So you get the idea that there is a reason why maybe some people say, well, maybe you should tie them a little bit more closely together, and I suppose that's why the Fed head of the table is appointed by the president as well, so that you can tie them maybe a little bit closer together in line with policy decisions. So there's an argument for and against. Remember, the idea of independence for the central banks is historically quite a new concept. It's not, it used to be very much the case that the government was in charge of what the central banks did. So, it is a relatively new concept, but it's a concept that I think most people can buy into because, having that independence allows a different set of eyes to be looking at the economy from a different standpoint rather than simply just to buy votes, for example. So there we go. That's where we're at just now. So we'll see how that argument pans out. Um, Numbers coming out in just 9 minutes, of course. So we'll be watching for the numbers when they come out, and then we'll kick on. So we're going to grab some lunch and then we'll get started, guys. In classroom, by the way, today we're going to be talking a little bit about forex. Why forex? Well, why not? I was going to talk about the spectrometer this morning, but there didn't seem to be an awful lot of interest in what we were going to be talking about. So we've just shelved that, and we'll come back to it at some stage. And but this time we'll certainly talk about forex, and we'll cover that in classroom today.